Good morning, everybody. I hear some playback or echo. I
Is
don't
it
know if you
Echo
guys
and the
hear that.
Bunnymen? No, it's one of your. You know what it is? It's the Rumble Studio tab. You got to
Yeah,
mute
this is
that.
a Rumble Studio thing.
You probably got two of
Maybe
them.
that's me. That's me. We're still trying to figure out the kinks. Apologies. Even though we have producer Robbie here, I figured it out. It was my Rumble tab. So that's that. I'm Manila Chan. That's Ted Rall. You are tuned in to the Ted Manila Information Show, otherwise known as the TMI Show for short. Happy not a yay. Not Monday.
No, it's not a yay.
It's just never a yay. It's
Well,
like
unless you're a if you're a short seller, it's a yay.
oh, that's true. Could be. In fact, that's going to be our main topic today. Is like stocks all around the world are taking a nosedive. I think the Dow just opened 30 minutes ago at like down 3% already.
That's correct. The Dow opened down 1,400 points in heavy trading, and then right now there's been a little bit of a rebound. So the net loss is about just over 1,000 points at minus 2.67%. But if you look at this over the last 5 days, the Dow Jones Industrial Average is down nearly 4,600 points and has lost nearly 11% of total.
Jeez. Wow. Well, we're going to be talking about that with Aquilles Larrea, who's joining us in just a little bit. So we're not going to really have time for headlines today because really, I think the main topic all around the world, everyone's talking about. How can you not? I mean, I know there's a lot of stuff going on around the world, like, the stuff in Gaza and the paramedics that got slaughtered, and there's a ton of stuff happening. We know that, but right now we're going to focus on what's happening domestically in your pocketbook. If you're somebody, a lot of people invest in stocks, Ted. It's not just the rich folk, but I will say, like 85% of the wealth in the stocks is owned by the top 10% of the world. I would say I think that's about the math. Like, let's just call it 90% of the wealth is owned by the top 10% of the people. So
that's true. Yeah,
that's approximately what it is. And then it trickles down to the rest of us in the worst way possible. Because,
trickles upon.
Ted, when you pee off of a cliff,
you might get sprayed back. Yeah, maybe.
So that's kind of what's going to happen. Anyway, so if you're a sensitive listener, this show's not going to be for you. We are live Monday through Friday at 10 a.m. Eastern. So please, guys, be sure to like and follow the show, as we are now official on Rumble, and we're able to do commercials and stuff, ad reads, all that stuff. So we are growing. It's taken a few months. We're growing, but every time you hit that like button, it helps us a great deal. So like I said, in just a little bit, Aquilles Larrea is going to be joining us. So we're not going to do full headlines.
Perfect for this financial. Yeah, it's a financial crisis.
It is a financial crisis, and we'll get into all of that with Aquilles in just a minute. But in the meantime, I've got one headline for you, Ted, after the jaws.
Okay.
Okay. So this, Ted doesn't even know what it is. I'm going to surprise him here.
Really?
Yeah.
It's not the one that's in that I'm looking you're reading.
Oh, you already look. But did you look at the
Yes.
the world's happiest countries?
I did.
Oh, you already looked.
Mm-hmm.
Okay, I thought you were busy on Jamarl's show, so I thought you.
I was, but I can do two things at once. Go ahead.
So the list of the world's happiest countries came out, and I found this pretty interesting. And spoiler alert, the U.S. is in no danger of being happy, Ted.
No.
We're not remotely close to being happy.
We never are, really.
I don't know if it's a surprise to anybody. Probably not if you're a follower of this show. So I'm going to scroll through the list, Ted. So Finland came in at number 1, then Denmark, Iceland, Sweden, Netherlands, Costa Rica, Norway, Israel, Luxembourg, and Mexico rounds off the top 10. So also not in there, not the Germans, not the Brits, not the French. I think interesting note, the Israelis, they dropped from their number 5 position in 2023 to now number 8 in world happiness in 2024. Mexico saw the highest jump from 25th in 2023, now rounding out the top 10. So the World Happiness Report derives its rankings from Gallup World Poll data, surveying approximately 1,000 people per country per year across 140 countries. The total sample size, they say, typically exceeds 140,000 respondents annually. The rankings are based, they say, on 3-year averages from 2022 to 2024. Respondents evaluate their lives using the Cantrell ladder on a 0 to 10 scale. And the rankings are based on 6 key factors: GDP per capita, healthy life expectancy, social support, freedom to make life choices, generosity, which they say is measured by charitable acts, and perceptions of corruption. In addition to life evaluations, the report examines emotional well-being through positive and negative effect indicators such as laughter, worry, and sadness. Critics of the World Happiness Report point out that survey questions measure satisfaction with socioeconomic conditions as opposed to individual emotional happiness. As well, there are a myriad of cultural differences around the world that influence how people think about happiness and life satisfaction. And they say, finally, there can be big differences in life satisfaction between groups within a country, as we can see here in the US, which are averaged out in a nationally representative group. The report does acknowledge inequality as a factor by measuring this gap between the most and least happy halves of each country. So, Ted, I was just at the number 3 happiest country in the world, in Iceland. And I get it. I get why they're happy. Oh, you're muted. Oh,
why was that? So why would you say that? Why were they so happy? It might not be the weather.
No, despite the weather, I just being there, maybe because I was like in vacation mode and I just figured I was happy, but the people were generally very nice. Everyone just seemed to have a really good disposition. I mean, the weather apparently 80% of the year sucks, but the people were like happy. And I suppose it's because they have healthcare, they have free college education. Everyone makes a living wage. I mean, it was kind of sticker shock for an American to go there and pay $10 for a hot dog, but it pays for a living wage for all the people there, and they do have a small population. So I think that's something to consider too, Ted. Like all these top 3, 4, 5 countries, these are people with like Iceland is a tiny population. Finland, there's some more. Netherlands, there's more. Sweden, there's more. We're talking like 30, 40 million people. Iceland is a teeny tiny country. So it's easier, I would say, to make a small number of people, like, I think Iceland, what did they have? Like, not even a million. I think they're like a few 100,000 people that live in Iceland, Ted. It's easy to make that many people happy relative to 50 million, or in our case, 330 million people happy.
Well, I mean, but on the other hand, smaller countries have fewer resources. Iceland certainly doesn't have oil, or, it doesn't have really much of anything except fish.
Fish! I was going to say they have great fish.
That's about it. So, I mean, yeah, they don't have I mean, you would think that a country that had abundant resources would have the ability to make its people happy. The U.S. has abundant resources.
Correct. So I don't know. Is it like a case of make do with what you have? And I don't know. It's the attitude of the people. They were just all really nice. And I strayed away from Reykjavik. I went out into like middle of nowhere towns, and everywhere I went, the people were
By the
generally
way,
jovial.
I noticed that Israel just 3 years ago, in 2022, they were number 4 on this list. And then something happened in 2023. I don't know what.
And they're here.
I do know what. And then they plunged like a rock below, interestingly, Costa Rica, which is sort of a surprising
Costa
entry
Rica's
there.
awesome. I've been to Costa Rica.
It's surprising that it ranks that high, though,
Yeah, to be number 8. So you're shocked that.
And Mexico is way up there too. I mean, Mexico is currently number 10.
I thought it was a narco state, according to Donald Trump.
Well, maybe that's why they're happy.
I don't know. There's a lot of like I wonder whys here.
Well, with Israel, it's not surprising that they've dropped.
Well,
right? I mean, they're at war.
Yes. Norway seems pretty consistently happy. They were number 6 before.
By the way, we're seeing a rebound in the Dow Jones Industrial Average. It is now currently only down 250 points since the opening. With a net drop of 0.7. So there is a serious rebound situation happening here.
It's not a real rebound at the moment. The market's only been awake for 45 minutes.
It looks like no data. I'm interpreting this. They may have just stopped trading on the Dow Jones Industrial in the New York Stock Exchange because there's no data coming up.
What would trigger that?
If there's a free
cyber
fall,
attack.
If there's that would trigger that. Also, if there's a free fall in the market, there's a trigger, an automatic trigger that prevents them, and the market will be closed and cease, and trading will be halted. That already happened in, I think it was the Tokyo Stock Exchange overnight.
The Nikkei?
Yeah.
Oh.
So, yeah.
I'm going to throw this question out to...
That would be really dangerous and terrifying.
Yeah. I'm going to throw this question out about happiness.
Trading has resumed. Basically, the market is back up to where it was. It's only down 0.3%. Very strange. Obviously, we're seeing some profit taking.
Hey, why is Finland so happy, Ted? They've consistently been happy since 2019.
It's their proximity to Russia. They can go to St. Petersburg whenever they want. I don't know.
And Denmark, they've been consistently.
I do know I know they have a lot of. They're very promiscuous there, so maybe they're just having so much sex that it's making them happy.
Wait, Finland or Denmark?
Yes,
both.
All the Scandinavian countries. Yeah.
Well, yeah.
I had a Danish girlfriend.
Promiscuity in Iceland.
I had a Danish girlfriend. She told me this crazy story. When she turned 16, her parents were like, "Are you still a virgin?" She's like, "Yeah." It's like, "Oh, okay. So this weekend we'll drop you off at the community center." Turned out that the city community center sponsored a teen sex orgy every weekend.
What?
Yeah, it was paid for by the taxpayers. I was like, man, I wish Ohio was not that exciting for teenagers. Yeah.
Okay.
In other words, it's not normal.
You really think that has something to do with these people being happy?
Well, it couldn't hurt. I mean, look, if you're getting laid on the regular, you're going to be happier than if you're not.
Okay, I'm sure that's
true.
Probably true. I'm sure that's part of it. But I was looking more at the socioeconomic issue of how these countries have some socialized elements.
Well, yeah,
right?
They're very socialistic.
Education.
Well, so do we, but they have more.
But they actually have it in actual practice, while still being a capitalist country.
Mm-hmm.
So, but again, is it because they have such small populations and we have a massive population, therefore it's just harder to make?
I mean, certainly, look, it is
hard. Needs?
As President Xi or Putin could tell you, running a big country is hard.
Yes.
And you will have you have lots of problems of keeping social and political cohesion. You have parts of the country that are necessarily going to be poorer than other parts, and you have to subsidize those. It's rough. It's harder. So I would agree that that's true. I mean, I noticed Luxembourg is on the list. It's minute. I know, Monaco and Liechtenstein are also always on these short lists of happy countries. So population size probably is. Manila, you're probably right. It's probably a factor here. On the other hand, there's lots of small countries that are desperately poor. Lesotho,
Yes.
that is a small
Yes.
country, and it's desperately poor. The one that was
Laos.
famously targeted for. Yeah, I mean, Laos has a pretty decent sized population, though, right? I mean,
No,
it's bigger
it's
than
like
people
6 million
think.
people.
Oh, is that right? Well, I guess it's
Yeah, it's
okay.
tiny.
It's a bigger geographically country than you think. Maybe that's just because the roads suck. So like everything
it's
feels like it's far apart.
Well, because it's a long, narrow, straight country. So,
yeah.
But there's only like roughly 6 million people. There's not a whole lot.
Yeah, it's smaller than New York City. I should bring us up. We should probably get to it. Aquilles, let me give you the latest from the markets, and then we'll do some highlights on the financial crisis.
We got to do an ad. We got to do an ad
All
first.
Right, go ahead.
A note from our sponsor, and producer Robbie is going to join us with that one.
Robbie's doing it, right?
Producer Robbie, pray tell, what is in store for us today? Who is the show brought to you by?
Good morning. So this morning, the show is going to be brought to you by Rumble, the free speech alternative to YouTube. And I got to admit, I'm really sucked over this kind of stuff happens. So
you got to click some stuff, right?
And then I am. I just clicked some things. I just clicked some stuff, and we're going to go. This sponsorship is from Rumble. That one is incredibly important to the survival of the company. When Rumble first started in 2013, they built a platform for the small creator. They didn't censor or have biases. They were fair and treated all creators equally. No one thought platforms would censor political conversation or censor opinions on COVID, but they did. Facebook admitted they fell to pressure from the Biden and Harris administration. Rumble did not. They held the line. They are attacked daily for giving us a voice to talk to you. They are attacked in corporate media. They are attacked by governments like France. They are attacked from brand advertisers who refuse to work with them. Corporate America is fighting to remove speech. Rumble's fighting to keep it. Rumble won't survive without brand advertisers, and they won't get much of it. Watching our show on Rumble is the most that they can ask from you. But if you really believe in the fight, and if you have the means, one major way that you can help Rumble survive is by joining Rumble Premium. Join the community that believes in the First Amendment and believes in our human rights of free speech. Rumble is offering a $10 off promo code with the code STUDIO when you purchase an annual subscription. Go to rumble.com/premium and use promo code STUDIO. Like I said, if you have the means and believe in the cause, now is the time to join Rumble Premium. If you don't have the means, we're just happy to have you watch us on Rumble. And that is very true. Love Rumble.
Can't say enough good things about Rumble. I was an early adopter, and thank goodness, because I'm banned on.
Hey, I mean, YouTube suspended my channel twice because of my channel handle. So I mean, seriously, it is what it is.
So please support Rumble.
We are very grateful to Rumble.
Yeah,
very much so. I'm going to jump off now because I see our guest in the back. Not the ghost.
No, the market's not that bad.
No, this is not the Halloween show. Listen, I'm telling you, I need more coffee. Now my workday today started at 4 a.m. That's I'm stuck in there already. Goodness. It's gonna be a long day.
Thank you for the ad read, Robbie. And thank you to Rumble.
All right, let's catch us up on the latest out of it. Let's jaws it. Jaws it, and all right. Okay, so it's a wild and crazy ride on Wall Street today. The Dow Jones Industrial Average opened down some 1,400 points, and it's been all over the place. We've seen a bit of a rebound. The market opens at 9:30 Eastern. It's now about 10:20 Eastern, and in that time, the market is currently up, of all things, by 1 full percentage point, up 367 points. Looking at the similar S&P 500, we're seeing profit taking up about 1.5 points. The NASDAQ up 2.5. I always find the Russell 2000 index very interesting. That is still down. Those are small cap companies, and that is down 2.6%. It might be, in some ways, a better indicator of the general state of business, at least on the short term. So let's get into some of the details that we saw over the weekend in the financial turmoil. The S&P, so we already got into that. The overnight stock futures plunged But now we're seeing a lot of recovery from that. So we may, I don't know if we're out of the woods yet. Aquilles will be able to maybe tell us that. Trump's tariffs policies are, of course, the precipitating factor in what is now the fourth day of a slide. Trump imposed a minimum 10% tariff on all U.S. imports, bigger rates, as high as 50% supplemental for countries like Lesotho, 34% for countries like Israel. And there's been a ripple effect all over the world. Asian markets like South Korea's Kospi index dropped 5.6%. Germany's DAX fell 5.8% in morning trading. We always look at those because obviously the time difference sort of helps us see how things might be looking ahead. JP Morgan and other Wall Street strategists are now seeing a heightened recession risk. The estimations go from anywhere from 30% to as high as 60 to 70%, depending on which bank you're talking about. Joining us to talk about the crisis in the financial markets is Aquilles Larrea. Perfect person to talk about all this. Thank you so much for joining us. He's the CEO and founder of Larrea Wealth Management. He's also the author of the book Wise Up With Your Money, good advice that you should take. Check out his new YouTube channel, Aquilles Larrea 1061. That's Aquilles Larrea 1061. Aquilles, thanks for joining us once again.
So happy to be here, guys, and such wonderful circumstances.
Well, maybe the market's while you were on hold, the market was rebounding. Maybe the
I saw it come up.
Aquilles is going to be on. It's like it's going to be okay.
Yeah, it's funny. We talk about the markets and all the turbulence we've been seeing having to do with these tariffs, but we forgot one thing: the market. You have buyers, you have sellers, and at the end of the day, I'll tell short sellers or the people who want it to go down, or people who buy puts, who want it to go down. At some point, you got to stay at your desk because, and I used to be one of those guys, because you got to cover your shorts. All right. If not, you're going to get it all over your shorts. All right. So just remember, with every downtrend that we see, that at some point, it's not sustainable. So if it's not sustainable, what ends up happening is that it starts going back up. I see this is really a response to the last 4 days more than a permanent trend at this moment. I still see a lot of volatility going forward. We're still going to see the tariffs cutting in. That recession number that you just quoted being from 30 to 60%. I just heard this morning it's going to be more likely like 60%. And my personal feeling on this is, okay, if we're going to touch off a recession, let's get it out of the way. All right. And people are looking at me, what do you mean, let's get it out of the way? And I say, well, you want to get it out of the way because most recessions don't last more than 6 months. All right. And if this is it, if this is going to happen, it's not like it hit the door and said, hey, I'm here, do something about me. No. So what we have to realize is that if it's here and it's affecting us, let's get it out of the way. A lot of recessions may only be 1-2 months, where you see that negative GDP. All right. But if you see it 2 quarters, then it's officially a recession. So we don't have all that information. We don't have all the evidence right now, guys. So what I would say to you, if you're an investor, and I'm saying this to my clients right now, is that there are great buying opportunities out there. I myself have been going out into the market, buying some stocks for clients that I feel, I've been talking about this on all media outlets, and I'll say it here. You want to buy high quality companies, good dividends that are going to make you long. You got to think like 10 years on this. Some people can't even think 10 seconds. And here I am talking about 10 years. But you need to think about this minimum 3 years. All right. If you're going to go in at this particular point. But I think that we're going to have a turnaround. I talked about this. I had my Simpsons moment, where I made a prediction back in December on a network. I said, we're going to have a correction. It was precipitated by these tariffs. But now we are entering, this is the end of the first quarter. We're finished with that. So we'll see what kind of numbers and how they affect us at this particular point. But what I see moving forward is a very cautious investor. At the end of the day, you need to be cautious, you need to be strategic, but you also need to be intelligent. This is not a game for the timid. And if you think that, you don't belong here.
Yeah, and don't
just
panic.
Very simple.
Don't panic.
Right.
Never panic.
Yeah.
Aquilles, let me ask you. This feels. I used to work at Bear Stearns and Industrial Bank of Japan, Bank of New York. I remember. To me, this feels a little bit different than those earlier downturns, like
Doesn't it always?
It all. Yeah. No two are the same, right? They're like snowflakes. But this one, it seems like I totally agree with your take. This looks like. It's the actions of the president triggering some panic about fundamentals. Normally or typically it's a bubble breaks, like the real estate bubble breaks, or so. That was also part of '87. We've had a bit. I think we've had a sort of undiagnosed real estate bubble now for the better part of 2 years, maybe 3 post COVID, and coupled with a frozen market. But I can't think of a time where a world leader, one person, made an announcement. And the next thing you know, it triggers a 4-day or a 3-day rout in global markets. I mean, it just seems really different.
Well, that's, it's a legitimate point, but I also want you to think of something. Anything in the world could precipitate a downfall, downtrend,
Sure.
Right? Let's go back to, you talked about bubbles, way back when Alan Greenspan said this irrational exuberance happened, he sent the markets roiling for days, and at the time I was a young advisor saying to myself, this guy's a jerk, but what he was really doing was trying to get a shakeout from the move to the upside that we had seen unprecedented at that time. We have had an unprecedented move to the upside, guys. Unprecedented. And I was hoping that this correction would come sooner. Sometimes we just need a catalyst. You have to think of it that way. And this was the catalyst, good or bad, ugly, indifferent. This catalyst took us to a new level of fear mongering.
Let's talk about Trump and this catalyst. And I want to let Manila get in a word edgewise. Sorry, I'm mansplaining here because I'm so interested in this topic. But I mean, is this the White House says that 50 out of the 60 tariffed countries have all requested trade talks. So this might be
Netanyahu is here today for that specific reason.
Right.
Not about Gaza.
Right. No, fuck Gaza for him. Right. But like, but like the Nixon madman theory. Right. It's like basically the idea is you make everyone think you're insane. They know you're serious. They all come to the table. Is it possible that in a week or two, everything's going to bounce back up because Trump will have settled all of these trade disputes? The tariffs will either be rolled back or eliminated, and we'll look back and be like, "Well, that was weird."
Well, you bring up a great point. So he goes in, and we have all these countries that now want to play ball. Good on him, right? Great, but is it going to resolve in a week? Could be a lot longer than that. All right,
50 countries is a lot of countries.
Yeah, because we don't forget the big countries don't have to play ball. They can just go to another sandbox. They don't care.
That's what China's doing.
Yeah. And China's also, there's talk of that they're loosening the restrictions on intellectual capital of the United States. So they can go and copy all our stuff if they want to. There's not a gosh darn thing that we can do about it. Until
they better not copy my cartoons. I'll come after you, Xi. Look out.
But imagine if they did, and you couldn't.
There's nothing you can do.
International, they catch you into the. One of two things I think could happen here, right? Resolution with all these different countries. We move quickly back to the upside because the market will respond to agreements in place.
Yeah.
or there's still more shakeout that needs to occur. There's still more profit taking that needs to occur at this point. All right. Remember, we had this big run up, and we're only shaking out a certain percentage now. Right. This is the reason why corrections are healthy, in my opinion. So take that a step further. If this goes on, I don't think it's going to go on more than a week right now. But there have been
just
cases,
a week, only a week.
Well,
you mean a week total from last week, or
I'm talking
another
about,
week?
Yeah, I'm talking about the back and forth, upside, downside, because not all, what is that saying? All darkness has a dawn, right?
It's always darkest before the dawn. Yeah.
Right. It's always the worst case scenario. Everybody's flipping out. And if you can keep your head while others are losing it, you will win bigly, as that guy says.
That's
But
true.
more importantly,
there are definitely some bargains out there, no question.
Oh, yeah. And that's what I want to focus on, guys. You want to focus on stocks that have been really beaten up, but the known names, we're talking about companies that are making 100 billion every 3 months. Yeah, this is going to affect them a little bit, but the long-term prognostications are all positive. It's just going to affect the next quarter's numbers. So we have to keep that in mind.
Aquilles, can we talk a little bit about foreign exchange? I took note of the fact that the U.S. dollar is weak.
Hold on. Let me get in there. Hold on. So I wanted to dovetail on the whole madman theory thing. Is it seems like the madman theme, the crazy guy theme, is a thing across the Trump administration, right? And we saw before Trump even got into office, when Javier Milei took office as president of Argentina, that was December of 23, I believe. So a solid year before our elections happened. And Javier Milei, that is, always said he was a big fan of Donald Trump, and he believed Trump was going to win, and he was pro MAGA, and he wanted to do Argentina to be, make Argentina great again. He copied the whole MAGA theme, right? So when he took over, he inherited an economy that was in severe distress. There was hyperinflation marking like over 200%, something crazy, like 220% or something like that. They were in steep recession. GDP went down almost 2% when he took over. The poverty rate was almost 50% when he took over. Everything was bad. Everything was in the toilet. But then his administration comes in, and I still remember, because I covered this, that he said he was going to do shock therapy on Argentina. And then he brought out the chainsaw, he did the whole, the whole bit with the chainsaw, and we're going to cut everything. So he wanted to cut government spending, which he did, which we're also seeing mirrored by Elon Musk. He wanted to deregulate a bunch of stuff, which we're now seeing with Donald Trump, with the EPA and all of this stuff, a lot of deregulation. And then he devalued the peso by 50%. And those policies were, trying to tackle this hyperinflation, the deficits, whatever. And he plunged the country deeper into recession, deeper into pain. I guess I can just say more broadly, right? But then 1 year later, Aquilles, 1 year, I was shocked, but the result was, in 1 year later, inflation dropped from a monthly rate of 25.5% in December 2023. I'm looking at some notes here, to just 2.7% in 2024. That's 1 year. So they suffered a lot of pain for 1 year. I mean, is that the same strategy you think maybe Donald Trump's administration is doing? Maybe they're talking to Javier Milei, and I mean, we saw Elon Musk, at CPAC with the chainsaw gifted to him by Javier Milei. Is that perhaps what they're doing as well, and we're just going to suffer for a year?
God, I hope not.
But I mean, the long-term correction, maybe.
It's bad enough that the and this comes from a Latino point of view. It's bad enough that the Argentinians, who are such a proud and wonderful people, brag about everything, and all of a sudden we're going to give them something else to brag about.
I get that joke. I know.
No,
I
no,
get
no.
it.
So the reality is, crazy, crazy like a fox, maybe. In the last administration, there are a lot more people who were, had their own agendas and were not just saying, hey, we're going to do whatever Trump says, we're going to do it, but we're going to try to rein him in a little bit. This time around, we don't have that. What we do have, though, is the fact that we're going and making these uh, negotiations with these different countries, which wouldn't have happened without a tough stance. But then what happens after that point, is anybody's guess. We are not going to see, we don't have anywhere near Argentina's their inflation rate
Oh, yeah.
because we have responsible governance here. Argentina has a lot of corruption, typical with Latin American countries. Right? They also have a lot of bureaucracy as well. So, in some facets of that economy, all welcome. Hey, what we're doing is not working. Let's try something different. So they did. And let me tell you, some guy asked me about a year ago, do you think that this is really going to make a change? And I said, well, if the people are willing to make the change and the government's willing to make these institutional type changes, then great. But I don't see it right now. And I was wrong. It got better. Right. But here in the United States, the factors are so much different. Right.
Yeah.
And
Yeah.
you can
Yeah.
try this. All right. But you're not going to bring inflation down to zero, not in its current state. These things are, if you were to see a graph, they're on a wave. Okay. We are going to test new levels of inflation. We're already seeing it right now. uh, we're definitely going to see a couple of months of negative GDP, maybe a little bit more. We're also going to see higher wages than you thought. Okay, I mean, I'm sorry, not higher wages, higher costs than what you
Mhm.
thought. All right.
Yeah.
Reason being is that all these tariffs are going to affect us somehow. I don't care if it resolves itself tomorrow. The damage is done. All right. And companies have went out and bought inventory all along. And that is going to affect us because it's more out of our pockets. Cars, electronics, especially
Absolutely.
electronics, 30 to 50% higher, right? Where are you going to get that? And let me tell you, when corporations get a taste of that higher price, they don't want to let that go. It's
But
like it's
yeah,
like
they're
a
gonna
new
pass it down to
tax.
us, right? They're just gonna pass it down to us, so they get all the upside.
Yep. Yep. So what you think you're doing, you think you're making them pay their fair share. And the truth is you're not doing a darn thing. You're making me pay more money for a good that I want. All right.
Right.
Now, for people who are not worried about money, that's no big deal to them. But for people who are living paycheck to paycheck, which in the United States, it's roughly 70 to 80%, all right, those people are going to be, if you don't have good technology, you are behind. So we're going to see even more of an income gap created from that. My opinion. We're going to see prices begin to rise across the board, whether it be clothing, electronics, cars, parts for those cars. All right. Toyota talks about, well, all our stuff is built here in Kentucky and where's the other place? New Mexico, I believe it was. But what they forget is that not all Toyotas are built here. there are a lot of Toyotas that are coming from other places. So they're saying, well, it won't affect us as much. I believe Honda and a couple of other companies. Who knows what's going behind the scenes? And I'm not a conspiracy kind of guy, but who knows what's going behind the scenes? Because you say to yourself, okay, well, we got this going on, but at the same time, we're still paying more for our goods and services. So what have we really accomplished here? And I think that is, if we talk about this a year from now, may be much ado about nothing. But that's only because of the resiliency of not the American consumer, but of the corporations. And some corporations are, if this were to continue, are going to put even more pressure on this administration to retract these tariffs. And that's what I see happening on a smaller scale, kind of behind the scenes, kind of push the other countries to get a better deal. But I
Kind of
don't
like a
really
bluff,
see it.
maybe like we're playing poker.
Yeah, crazy like the fox. They used to say that about George Washington, right? He was crazy, crazy like a fox. He outwitted the British, during the Revolutionary War by making like he was retreating, and then all of a sudden a bigger force met with the British at another place. So I'm seeing, it doesn't mean I'm right, but what I'm seeing right now is we are playing around with these things. But at the end of the day, I think that the American consumer will lose out. It's going to cost them more money. It already is. We're already stretched as thin as we can be with a certain amount of the population. Why do we have to do this? If we have to do this, then do it on a smaller scale.
So
Don't just have, go into this willy-nilly, say, well, you're going to hurt for a little while, but why should I? If you do your job, I shouldn't be hurting at all. There's better ways to lower the prices.
What does the pressure look like inside the Oval Office? I mean, we can tell the president's getting it from his messages on Truth Social and everything. He's responding to it. Are these calls from CEOs? Are these from within? Is this his own financial team? Are they getting the calls and passing them on? I mean, there's got to be obviously a lot of very unhappy captains of industry right now. What does that look like? And, right now, of course, Trump is showing his usual bravado. Nothing will change my policies. But in reality, the heat's on, right?
Yeah, the heat's on right now, especially with this type of rundown, because if you think about it, the average investor will sell during this time. We're not we're dealing with emotion. So his people are saying, or the people who are actually contacting him and influencing him, now he doesn't care left or right about it, but it's starting to seep in that, okay, well, I got their attention, but maybe this wasn't as much of the attention that I kind of wanted. Maybe we should have done something a little bit different. Maybe we should have somewhat tethered it back a little bit, but who knows? Who could speculate what's going on with this gentleman? Also, there's been talk of mental incapacity, or degradation. Now, I don't want to say that, but it does happen, where you're just not as sharp as you were when you were in your 20s. That's a fact. So
and Donald Trump's he's not a Wall Street guy. He's a real estate guy.
Right.
And they ain't the same.
But yeah, and Wall Street controls a lot of the behind the scenes with companies. If you're not performing as the CEO, you're out. And then they bring somebody else in who, you have. This is just a fact. You get enough
more and
of
more,
these people.
though, they are. You Wall Street guys, more and more of these Wall Street guys, remember, these portfolios are buying up all the single family homes out there in the market more than ever. So, that they're starting to control housing as well. So it's kind of, we saw in 2008 the overlap, right, of the real estate industry and stocks, because they were, rolling these into portfolios. But now the hedge funds are straight up buying properties, like whole swaths, whole neighborhoods in middle of middle America, anywhere, anywhere town USA. And that's so, that can really, I feel like you can't separate the two anymore, Wall Street and housing.
You're not wrong, Manila, but at the same time, they get rid of it as quickly as they acquire it.
Are they
They're
selling
not
them?
emotional about. Yeah, you'll see as they go along, they'll get to a point where they feel, okay, our valuation's here, we got a guaranteed profit of XYZ, we're out.
Oh,
I've
that's
seen
good
it.
to hear, I think. I think it's good
Well, we
that,
see it with the
you know,
REITs. The REITs
yeah,
will go and do strategic acts, the REITs, real estate investment trusts. So we'll see them do strategic acquisitions all the time. Doesn't matter the sector. Very
yeah,
into the multifamily units. They may not go singularly like the hedge funds into the single house because there's very little profitability in that.
yeah.
So unless you have a swath of terrain, and they're developing where there's more money involved. I don't see it as a long-term hold for them. I see it as a short-term, and let's get
That's
rid of
good.
this and let's go back into our strength. They might diversify that to, in my opinion, they might diversify that to really just get some more income somewhere else.
That's good. And Robbie has a question.
Yes, I have a real quick one. So you mentioned that prices are going to be going up, and I mean, we know the wages haven't been going up now for years. Could this be a strategic play by Trump? And I use that word loosely whenever I talk about Trump because I don't know if he has a strategic thought in his head. But could it be that he is banking, because supply and demand is still a thing? If you price out 80% of the American consumer, that's going to cause pressure on these companies. Could that be part of the strategic analysis for Trump going forward to try and bring back investment, start bringing back domestic production into this country for the tariff relief for those companies to, on one hand, increase wages by bringing back higher paying industrial jobs, while also creating downward pressure, on retailers like Walmart and other things? Or do you think that doesn't even factor into the equation here?
I think it's a lovely idea in theory. I don't think it's really practical at this point in time. How do you reverse 40 to 60 years of, oh, we're going to foreign markets to get a better price? You're going to do that in 1 year? He doesn't even have enough time to do it. 4 years to try to reverse that trend? Forget it. That's not
Yeah,
happening.
if you're thinking about, if you're a CEO and you're thinking, oh, let's build a factory in the United States, it'll be better than Vietnam or whatever. That factory is not going to be operational until the next president, and that could be a pro trade Democrat.
Yeah. And what I'm thinking could be, and I'll drop off after this, Trump has been really trying to apply pressure on the Fed to try and get Jerome Powell to lower interest rates and that type of thing. And with what the Fed's mandate being one of them, control prices, but also unemployment, could this be his way of trying to strong arm the Fed in lowering rates to make borrowing money cheaper?
This
That's
is
what this is all about.
This is exactly what it's about. All right. When you're an economist, all the economists have come out and said, well, we don't agree. Even Jeremy Siegel, who's one of the most bullish guys I've ever met in my life, came out with a scathing report on what he's doing, basically saying, hey, he doesn't know what the heck he's doing out there. But yeah, this is a strong arm tactic. He in his head, well, Jerome Powell is not going to do what I'm telling him to do. He's not playing ball. So I'm going to strong arm him into doing this. And let me tell you, Fed governors don't like being strong armed. You're not going to win that way. All right. So go ahead.
How does more debt, help the American family? How does more debt help the country? I don't understand. Why would you do that? Most Americans are already drowning in credit card debt. So why would adding more?
It's not geared for the American consumers. It's geared for the corporations who can go and refinance the debts that they have across the board and make more money that way. And the rationale is that it'll trickle down to the American consumer, which is a fallacy. That economic theory has been debunked so many times. They're still talking about trickle down economics. It's such It's such garbage, guys. I can't even entertain that thought.
So then this is just another wealth transfer from the working class up to the rich who already have more money than God, is what you're saying.
For corporations.
Yeah.
And tax breaks for the rich. They got to justify these tax breaks, guys. If you think about it, they got to justify it in one way, shape, or form. Okay, we're going to take some from the government. We're going to take some from from these other places and the like, and we're going to come nowhere near what we need to sell this tax cut bill. But who cares? We're in power, and we're going to do whatever we want to do.
More good news. Thank you, Achilles.
I'm full of good news today.
Well, I mean, I recently heard a libertarian kind of simplified explanation of how they view Trump, being that he's not a stocks guy, he's not a trader, he doesn't understand, maybe he doesn't have the full understanding of how all of that works, is that Trump keeps pointing to trade imbalances. Let's take China, for example, because that is our biggest trading partner. And that Trump keeps saying, oh, there's a trade imbalance of, 26, whatever, I don't know, pick any number, right? But in the very simplified version that I heard on this podcast, that it would be as if, like, you and I, all of us, we're consumers at the grocery store. We go to Kroger, we go to Safeway, right? And we keep giving them our money to, buy their goods because we want it. We want the cheap goods, right? That's what we want. We go to Dollar Tree, we go to whatever. We need this. We need a little hand shovel or whatever at Dollar Tree. I want to buy that dollar hand hoe, right? We keep giving them our money. Dollar Tree is in no obligation to come to my house and say, hey, I want to buy, can you make me a sandwich? I'll buy a sandwich from you, right? There's no obligation of Dollar Tree, so it's like tit for tat. Like, okay, I buy something for $1.25 at Dollar Tree. Dollar Tree should come to my house and buy, I'll make them a sandwich and they buy it for $1.25 because ergo, then there's no trade imbalance, that by Trump's line of thinking, if you apply the same logic, then if it's a dump of cheap goods into America, then what if China gave us everything for free? If everything was free, can you still say it's worse for America now? It's worse for Americans because they're giving us free Chinese goods?
If it's free, it's communism.
But that's what I mean. The logic doesn't stand, right? Because he's like complaining.
It makes no sense whatsoever. Yeah, let's break it down to its simplest components. All right, you're paying more at the grocery store for goods that a year ago you might have gotten a little bit less. All right, but the prices always go up. Corporate greed doesn't change. That's a simple fact. That's not going, it's until the American consumer says and starts pushing back on the pricing and doesn't buy as much, and it affects corporate earnings. Back in the 70s, we had several, there were several movies that highlighted what was going on with the gas thing, and how it was affecting the American consumer. This is not too unlike that, except we're going into different areas. We're seeing oil at a certain level right now. We're seeing gas prices not really as affected per se, but your rice staples, your meat staple, everything is controlled by 4 to 6 companies here in the United States.
Yeah.
And one of them's Chinese, Smithfield, right? They control most of the meat consumption here,
Yeah, our bacon.
Yeah. Yeah. So, we have to say to ourselves, at any point, is there a way that we can push back and say, hey, we're not going to buy as much, or we're not going to buy it at all. We're going to find all other alternatives that might be a little bit cheaper, or do we need to start going out to the farms and buying it directly? Because some people will do that as well. I see that all the time. And by the way, we don't have to worry about the pesticides and all these things because
That's right.
it's originally organic. But who in the American public can really afford to do that long term? It's not a sustainable thing at this particular point. So we need to get back to these companies and say, hey, we could afford it at five. Let's just say, for argument's sake, we could afford the rice at $20. But here you are putting it at $26 when a week ago it was 21. That's how
Right.
I'm kind of looking at this. Commodities go up and down all the time, yet some prices never move. And that's really because there's some cost control there by the corporation to keep their profitability and that sustainability.
And Achilles, we have a viewer question for you from Adrian. Adrian wants to know, let me pull this up here. He wants to know, when are the banks going to write down the value of their commercial real estate loan book? And have these loans been repackaged into CDOs like they did in 2007?
The question is, it's a great question. Thank you for that, Adrian. The question, I should say, the answer is that I don't see that happening anytime soon. The commercial side hasn't learned from the bloodletting that occurred these past couple of years. They're still going as if it was day one. You know why? Because they have enough cash and enough time on their side to ride out the storm. So I don't see it. Could be completely wrong, but the commercial market, in some areas is actually pretty robust and they're doing well. It's not across the board. All right. Here, there's a lot of here in New York, should I say, there's a lot of companies that are just, they're they're going to stay doing what they do because it's all that they know. They're not going to convert commercial to residential. That's, a far off dream, to some people. Hey, let's get more housing. And they're like, they're
Yeah.
not going to do that. It's not profitable. Corporations, conglomerates, REITs, they're going to do whatever hits that bottom line so they can pay out their 90% out to the investors, right? Which is they're required to do. They are not going to get altruistic by any means or philanthropic in any means. They're going to stay the course, keep doing what they're going to do, right or wrong. Not much is going to happen there. So sorry to let you, I'm trying to break it down, let you down gently, but that's what's going to happen.
Well, that seems like a good place to leave it.
Yeah, leave it there. Perfect. Right on the hour. Aquilles, we always appreciate your insights, especially being there in New York City, and you got your finger on the pulse, and you have, your investors are there.
Aquilles, are you chomping at the bit to get in front of your computer and start trading?
You know what? I always hold back a little bit because I love these rundowns. And, I talked about this on another show the other day. There are great opportunities at any moment to make money. And, think about it. Say you shorted the last few days. If you had the gumption to go do that, you would have really done well,
Sure.
Covering your shorts today.
How many days? Is it still 90 days that you have to buy back?
Yeah. You're thinking of the wash sale rule?
Yeah.
No, I think they've changed that now, but I don't have that in front of me. So I think they actually might have made it shorter that now. But don't quote me on that.
But the point is, it's like, so there's sort of an inherent implicit rules bias in favor of higher pricing, right? Because it's, buying's open-ended. You buy, you don't ever have to sell. But if you sell short, you do have to buy it back.
Right. So think about it. You got a company that went from 100 to, let's just say they're 60 right now, right? That's a 40% discount, guys.
All in your pocket.
They pay you out a 6% dividend or 7% dividend. Why would you not pick them up?
Right.
Why would you not go buy them? That's what I love about this industry, that we're able to, sometimes they call me a bottom feeder. I'm like a catfish. But I'll go in and yeah, exactly. I'm gonna go in and I'm gonna buy that stuff when everybody's looking at me doing this, the head shake, but I'm gonna go in and I've
Why not?
never made
Yeah.
money back from these downtrends. There's always this opportunity, and that's why you cannot panic. This is why you should never sell. You know when it's time to sell? When the CEO has done impropriety, when the board was in on it, when it's criminal what's happening.
Yeah.
That's the time you sell. But I can't fathom any other reasons, to take this and not take advantage of it in your 401k. Maybe you raise the 401k percentage up 1% or 2%. That wouldn't kill you paycheck wise. So maybe that, or in your IRA. Wow, I got to file my taxes and take some extra deductions this year. Let me throw an extra 100 in there if I have it. $50. It doesn't matter. The point being is that you will thank your lucky stars if you take your advantage now, in my opinion.
Yeah, good stuff. You can see more. It's at the bottom of the screen there. You can see and learn more from Aquilles at larreawealth.com, and go check out his newest book. Let me get it on the screen here.
Well, it's behind him.
Screen. Well, it's behind him too.
It's
but
right behind me.
In case
that
people don't know,
guy behind me.
There you go.
That's it. That's the book right there. Wise up with your money. Aquilles, always appreciate your time. Thank you so much. Always a fun chat too.
Absolutely. It's a pleasure's all mine. Thanks, guys.
Enjoy
your week.
Talk to you later.
Thank you. See you soon. Bye-bye.
Bye.
And then, okay, producer Robbie, we're going to bring him back on stage because we have another message from an advertiser, our sponsor. We have a new sponsor, another one.
Absolutely. Like I said, I mean, Rumble, for those of you who are watching on YouTube, I just want to let y'all know Rumble is really where it's happening. They are going out supporting the TMI show. Come over to Rumble. The weather's great. The chat's active. It's a great platform. And the
Rumble room is hot.
Oh, always.
Spicy. It's always spicy in there.
Let's make this happen. I want to talk about the things that people are afraid to say out loud. Who's in control of America's nukes? It's not Biden. Well, not anymore. It's not even Trump, probably. Meanwhile, we have Russian ships off the coast of Florida and a full-blown war in Ukraine and Israel. The world's at its most unstable point since World War II, and with nuclear weapons, the stakes are 10 times higher. How do people like you and I stay safe? Every prepper needs to have Radio Guard ACE, the only FDA-approved drug to treat radioactive fallout. Only the feds have it until now. That's why Rumble partnered with 5G Free, the only company in the world that has a supply of Radio Guard ACE and the ability to prescribe it prophylactically. Get their radiation emergency kit with Radio Guard ACE, potassium iodine, Zofran, and a Geiger counter. There's simply no other tool in your arsenal to protect against a radioactive threat. Go to 5gfree.com. Use code STUDIO to save 15% and get your radiation kit now. Everyone needs a radiation kit.
Wow, you were worried
kit.
About the stock market.
Hey,
wow.
Listen. Hey, listen.
Wait, a Geiger counter? I'm going to get a Geiger counter?
Rumble's hooking us up with a Geiger counter. Well, Rumble's not. This advertiser is. So, I mean, all things being.
Wait, are they sending us a Geiger counter?
Well,
ultimate radiation defense.
Yeah, well, if you go to the advertiser whose link is now in the show notes over there on Rumble, and check out the sponsor and get yourself a Geiger counter. You never know when you're going to be going into a nuclear winter, economic or nuclear. I mean,
I was more scared. I was more scared about a nuclear winter 7 months ago, when the old senile guy was still in office. I'm a little less concerned about it now.
Are you kidding me?
Little less.
I mean, I would have agreed with you like a month ago, but
no, Trump is chewing for. Trump wants a war with Iran, and I don't see Russia allowing Iran to be destroyed. I just don't, or China.
No, I don't agree. I don't think that either. But I just, I don't think Trump is a big fan of war. I think this is tough talk. So I don't know. I mean,
Trump seems to be a big fan of economic war, especially on his own people.
Oh, for sure.
So there is that.
Oh, for sure, obviously. But
screw that.
But radiation, no bueno. So I'll go with that one.
Yeah, we'll see.
We used to have Geiger counters. I was a physics major in the lab at Columbia. Part of the Manhattan Project was in Manhattan because it was run by Columbia University. In the basement of the physics building, when you walk in at ground level, at campus level, you're on the 5th floor. Oh. But there's down. So if you took, I don't know if this is still true, probably isn't, but you used to be able to take the elevator down to the 1st and 2nd floor. The door would open and there's a lead wall there. So we used to, for fun, take our Geiger counters down into the elevator on the 1st and 2nd floor and see if it was still hot. It was.
Oh,
weird.
There you go.
Okay, well, I mean, I'm a prepper, but I don't have all of that stuff.
No. I have What do you prep? What do you have?
I have big, giant, I don't even know, big containers of water that you have to change out every so often, right?
You have to drop a little bit of bleach inside. Yeah.
Yeah. Well, we just change it out every so often. Tons of canned goods. We have MREs. We have tons of guns and ammo up in this house. And candles, right? Things to start fires with. So just a little bit, but that was all during, that was purchased and collected during the early COVID era. Cause we were
remember to rotate your MREs, eat the older ones and restock.
I know. Yeah. We check those out. So we've got several more years on those MREs, but I do cycle through the cans. So I look through the cans, every so often and make sure we have a lot of canned goods, but we're stocked in this house. Although I don't have anything to combat radiation.
Well, Rumble's hooking you up with an advertiser who can help you out with
that's true.
With some iodine. So
that's true.
So honestly, soap and water is your best defense against radiation.
We have iodine, tons of iodine in this house, because that was a great nasal rinse during COVID. Yeah, and that you can do anyways. Like after I came back from CPAC, I did the whole nasal rinse thing. With
to wash those conservatives out of your nose.
Kind of, yeah.
Conservative.
I don't know what they're breathing in there.
There is a difference between conservatives and neocons.
Well, right. CPAC was more of a neocon.
Con versus neocon,
yeah. This was a neocon, the neo CPAC.
Well, I'm going to go away so that way they can see you smart people.
We'll say goodbye. Anyways. All right. That brings us to the end of the program. Anyway, so I don't know. Ted, last word on this is what? Sit tight, right? Don't panic. If you have a little bit of money in the markets, I've got a little bit of money.
You don't want to sell when everyone is selling because you're just going to get burned. I mean, better to wait. I know this
volatility is part of the game.
Unless you're a day trader and you're on top of this shit every day, second by second, that's different. But for the average person like me who doesn't really do that,
just let it sit.
Yeah, probably just let it sit.
Let it ride.
Unless you need it.
15 black. Let it ride.
Yeah.
Just let it ride. That's eventually you'll come out on top after some time, right? If you just keep it on 15 black or whatever.
I mean, of course, obviously we could be wrong. It could just get worse. This show is not offering financial advice, and we are not responsible for any of your dumbass decisions.
That's true. That is very true. I don't know if I'm responsible for my own dumbass decisions.
Maybe not.
Yeah. This is not financial advice. This is all conjecture, and we're talking amongst friends, and you all are listening. That's all this show is. So yeah, don't take our advice because it isn't advice. But I've got a little bit of money in there. I'm not freaked out. I'm ready to buy some more, as stock prices plummet. I'll see what I could buy, in the Fortune 500s in the blue chips for, I don't know. Let's see what's on sale. I love going to sale aisles. That's what this is.
I would buy Tesla.
Tesla's going to.
The stock is in the toilet. It's
I got it right here.
It's got a future. You don't have to like Elon Musk to buy Tesla.
That is true. But a lot of people are going to say, Ted, out of, out of their code of ethics or whatever the hell they want to say.
Yeah, I actually don't. This will surprise people, but as a leftist, I don't believe in socially responsible investing. As Sid Vicious said, no one is innocent until the revolution comes. Everything is about profit taking, and you live as a capitalist under capitalism. You can't single-handedly bring communism. So,
right.
If I could, I would. But
there's free market trading.
Recycling doesn't matter. Socially responsible investing doesn't matter. Your individual actions do not matter. Now, you can do them and they can make you feel good, but they don't have any effect.
Right. So there you are, looking at Tesla at pre-market trading. I don't know where it's at now, but it was down 6.22%. So there you go. And if you thought Tesla was too expensive, you're gonna have a chance because everybody hates Elon Musk right now and hates Tesla. So
that's true.
So there you go. All right, that's going to do it for Ted and I. I am Manila Chan. That is Ted Rall. Thank you guys so much for tuning in. Make sure you guys hit the like and the subscribe button, the join, the follow, whatever it's called, depending on the platform that you're watching. Remember, if you do find value in what we're doing, please support our work simply by hitting those buttons at this point. And if you're
if you don't find any value in it, just hit the buttons.
If you're in the financial position to become a $5 monthly subscriber, pretty soon we're going to be launching our subscriber only content as part of the Rumble rules. We have to put up X amount of monthly subscriber only content.
It'll be nude images of Clovis.
Ooh. Clovis gonna shave certain parts?
No, just as is, only wearing his fur.
I might show some ankle, Ted.
Ooh.
There's a market.
I don't know. Like, do people need to see?
Whoa, socks. Sock aficionados. We don't know yet. So just so we put this out there, we don't know yet exactly what the subscriber only content is, but it's a subscriber benefit, and that's part of the Rumble creator program.
If you guys have thoughts about that, you can email us. Email
us. I'm going to put the email up there. This is especially for the Rumble viewers, because this is a Rumble content creator thing, that we do have to put up special content just for the paid subscribers. So if you guys are paying, then you guys should tell us what you want us to talk about or show or do or whatever. I don't even know. We have to sort this out this month, in April. So we have to sort all of this stuff out in the coming weeks and bring you some subscriber only content. So
okay,
email us.
Bye, everyone.
Let us know. Adios, amigos. Thanks for tuning in. See you tomorrow, 10 a.m. Eastern. Bye.
Bye.